Hello everyone, I'm going to share my trading plan for this week. If you like level-headed analysis without the complexity that helps you trade the crypto markets, I'm your guy. I've been doing this for 7 years, made quite a lot of money. I also create hundreds of winning traders every single week with evidence. If you want to join those winners, even in a bear market, let's get into the analysis. We'll start with the weekly chart. I'm going to share my key levels that I'm watching and also the trades I'm waiting for eagerly. And I've been waiting for these trades a while, about 3 weeks now, nearly a month. And when they do come, it's going to be an opportunity to make a good amount of money. We'll start by looking at the trend and market structure. We had the peak here in 21, 2 years later in 2023. Market structure has continued to trend downwards, but we've seen somewhat of a reversal over here where market has broken its first lower high and then gone up here, broken the next one, and we've just got above here, or you could even say we're testing it. This is the next real big test, and that's why after here I'll be looking for us to get to about 36k. Seems like the next logical level, confluent with this, and then the next level I'll be watching is up here, actually around 47k. You can see based on market structure how I set key levels. Back when we first broke above this 17k level, I was extremely bullish and looking to catch longs. And then when we broke above the 20k level, my bias entirely changed and I started longing all the way up to, I think it was 25k. Similarly again, waiting for that structural break, extremely bullish, make money on the way up. And we're here again, waiting for a potential structural break. Market structure really is key to identifying key levels. Then the other thing that's extremely useful is taking a look at moving averages because they do give you a good indication of what's going on with the trend. When they're fanning downwards, like they were for this period here, all of these are indicative of a downtrend. And the first crossover we saw was over here. Remember, this is a lagging indicator. So if you could have spotted the market structure break, you didn't need to quite wait for the crossover. If you spotted the close above this level, you would have caught it a little bit earlier. But it's a lagging indicator that lets you know what's happened. And as you can see, the moving averages here confirm the bearish trend weakening and moving up. And now what we have is a slight uptrend with the 7 moving average above the 30-week moving average, but we're still below this very powerful 100-week moving average. And that really is the big test right now, what we're trying to get above. And it's an extremely real possibility that we don't get above this level. And then what happens is we start making our way down to test this 17k level here. Now there's many steps before that. We've still got this 25k structural level, but should we reject here and come back down to retest the 25k level, I'm going to be extremely bullish because psychologically, I really don't like seeing a high like this being made in a very strong uptrend, then a choppy, slow, or even fast bleed, then another pump testing that high, immediately rejected back to the next key structural level. Psychologically, although there's structural differences, that reminds me of this. Bull market high around here, price crashes down, we start seeing the uptrend resume, goes slightly above, and then we crash down, break structure here, and then enter our next bear trend. So psychologically, that reminds me of something like that. And if we come back down, I'll be looking for the bearish arguments to see price start going down and test each structural level that we previously had. We've got 25k, that'll be extremely important. We've got around 20k over here. You see, this is how I find the most important levels, just looking at key structural ones. It really is one of the binding points of my entire trading style and analysis. So we'll mark out some levels on the high time frame chart, and then we'll jump down into the low time frames to really solidify them. So we've got the 31k level there. We've got this 25k level there. These would probably be on the 1 week, the two most important levels. And notice how these are perfectly synced up with the 30-week moving average and the 100-week moving average. That is not a coincidence. As far as trend is concerned, we're still in an uptrend. Like as long as we stay above this level and we see continuation here, we're still in an uptrend. It is not a terrible situation for the bulls. And what we saw for the first 6 months of this year, hopefully we see for the next 6 months. But until we break above this level, that's not confirmed. And to see when the downside is confirmed, we'll have to zoom into either the 1 day or maybe even the 4 hour. So coming into the 1 day, the moving averages really do tell the story well. You can see that we're trying to get a breakout over here. Moving averages have crossed. The 30-day is above the 100, and it really wants to break out over here following this big move. However, as we can see from this more short-term moving average, it's starting to lose some steam and come back down. Eventually, these two cross, and that would put us back into ranging conditions. And the moving averages really do show the battle going on here. If you guys want to understand any of these concepts in a lot more detail, I have a bunch of free trading courses that I could charge thousands of dollars for in my free Telegram that you can check out with the link in the description below. Follow them and you can learn all of this. There's PDFs, worksheets, assignments, the whole lot. So you can see we've used the high time frame to get a really clear idea of what's going on with the market. Now we're going to get into my trading plan as we go into the 4-hour chart. So we've got this upper resistance here, about 31K. Looking at the two price closes here, I'll take it slightly higher, about 31.3K. That just better fits the data. Remember, using the lower time frames is like using a microscope, and then the higher time frames are much more zoomed out. So at this point, I'm going to get rid of the moving averages because I no longer want them, except the 7, which I always like on my chart. Then we're going to set a lower bound. This is a pretty clear best fit of data for me, confluent with all of this data here, this wick here, and these closes here. And then I'm also going to set a soft resistance over here, about 29.5K. I'll explain soft resistances in a second after I explain my plan. Then with regards to soft resistances, you can also set one here, about 31.5K to be exact. That's what I like. So for almost 3 weeks now, as we've been in this range, I've been waiting for a breakout or breakdown, some sort of continuation from this pump here. And just to explain this pump down here, we previously were in a range. Let's take this down to 25K, between about 25K and upper part of the range was right here around 30K. Then what I was using as a midpoint of the range was over here about 27.2K. This marks the breakout level I was waiting for. We had one deviation there. Besides that, extremely strong resistance and then big breakout over here. So we got our breakout up to the extremity 30K. We got above 30K, as you can see here, retested it, and then entered this consolidation. So now we haven't quite established the range, and we're looking for either expanding the range or continuing the trend. If the range expands, what's going to happen is I will no longer treat this 30K level as a key level. I'll have the upper bound of my range, about 31K, the lower bound, about 25K, and I will assume a ranging environment between about 31K and 25K, and I'll trade it accordingly. We can see some good momentum as the price breaks down. So assume we lose this level here as price is kind of coming into it, and this is exactly what I like to see before price breaks down to the downside. Like you can see the mini structure here really starting to show, excluding this anomaly wick, that we're seeing a downtrend, price is weakening, demand is weakening, market is getting shaky, and boom, we break this level, we come down. I pay attention to how we test this 29.5K level. So when I look at soft resistances is often you can get anomaly data, which is quick spikes where price deviates from the consolidation range. Now, these can be a bit too late for you to enter positions, but sometimes they can end up being extremely strong resistances and not anomaly wicks. So you want to pay attention to how price reacts. So say we get below here and I enter my position, say 29.7 or 29.8K. I enter my short position. And then when we test 29.5K on the lower time frames, the 1 hour, the 15 minute, I'm seeing some strong reaction and demand coming in, buy pressure coming in. I may reduce my size, or I will implement some trade management to reduce my risk at this level and re-enter once we break because it was more significant than I initially thought. In many situations, you also may just see price just melt through that 29.5K level and go straight to the next one, 27.2K. So the most probable play right now with us at the bottom side of the range and showing this mini downtrend within the range is that we're going to break back down into the previous range and start heading towards about 27.2K. And we've got a few levels before that, namely about 28K over here that we're likely to test as we go down. Similarly to how I view that as a soft level, I'll view this as a soft level. Pay attention to how price reacts here before it hits 27.2K. Implement trade management if needed. Now to the upside, we have the first level, which is about 31.3K. That's what I'm looking for my main breakout. And then secondly, we're going to pay attention to how price reacts to about 31.5K as we enter the position for our breakout and potentially manage it there. If we break above that, we'll have to zoom back out to the 1 week. And I've mentioned this target before. I'll be looking for about 36K over here. That's the best fit I see on the data. There's a couple soft resistances before that, but should we get that breakout above, I expect the first area we see first serious resistance at will be 36K, and it should be a smooth road up with a lot of potential to make money there. That's my plan for Bitcoin going into the next week. I'm going to start trading altcoins a bit more aggressively, and you may see some videos from me with regards to my strategies and what altcoins I'm looking at there. If you want to learn to trade for yourself and actually win consistently, like the members of my Discord who post 50, sometimes 100 plus wins in a single week, you really don't see any other Discord with that level of not signals, but members who just take their own trades and win, then consider joining. There'll be a link to that in the description below as well. That's all from me. I'll see you next time.